Hello, this is the Chart Profit video, just over about 1.5 hours into the trading day on Friday the 26th of August. This is from the pre-open today. We have two levels of point of control support, one down here at 2158.50 and this one here at 2177.50. So pre-open on Tuesday on a very short-term sampling period. 2177 has now attracted more time than 2158.50 and become a point of control on the monthly time frame. So this became an important level after this price action here on the Monday. Tuesday we printed a value area above it, again on Wednesday here. Even though on that Wednesday I had marked aggressive selling, red here, for the first time in about 24 days I think. I said that this was reactive selling. What I mean by that, reactive selling on the longer time frame, aggressive on the day frame. That the value area was printed entirely above 2177.50. So this probe later in the day down here is still important because it satisfied all the rules of marking aggressive selling. But the fact the value area was up here above the point of control meant that in the longer time frame this is reactive selling. So the time spent below that level would be a negative, and that's what we had on Thursday. So this was a negative development, but as I said pre-open today, Wednesday's red at bottom low was tested, but so far there's been no follow-on weakness. However, Thursday's value area was generated entirely below that point of control, which is weak price location in the short term. And I said unless the E-mini recovers quickly back above that point of control, we should expect a test of 2158.50 down here. In the longer time frame, price below here would be a real negative and a real concern. Just to remind you that about an hour ago, Janet Yellen delivered her speech at Jackson Hole. Says the case for rate hike has strengthened. Now the E-mini is back above 2177.50, as we can see here on this. I think it's a 5-minute chart. I beg your pardon, we're on an hourly chart, of course we are. And that is a stronger price location if it holds towards the end of the week. The first real sign of weakness for me now would be significant selling. That's red on the profile, marked below that level, 2177.50. We haven't seen that yet. So currently, as you can see on this chart, back over the last couple of weeks, there's just a sense that we're oscillating and building that level. Let's have a quick look at the stock indices. This is the Spider, currently holding above its 3-month support at 216.33, and the major down here at 209.90. So you can see this maintaining a strong price location above that level, as is IWM, the Russell 2000 ETF. Big level on this chart, as we know, is the major at 115.35. UK FTSE 100 index holding above its 3-month at 67.23. Looks like it might close about flat on the week. We've been down for a number of days here, but holding that level. A very clear negative divergence between price with a higher high and the momentum indicator at the top there with a lower high. My view of things, though, as long as it holds 67.23, it's in a strong price location, the FTSE. German DAX index doing its best to hold the halfway point here. Time printed below a halfway point is weak price location. Let's hope for a bounce early next week to keep it in a strong position. This is the New York breadth indications through Thursday. Two important breadth indicators at the bottom here. The 5-day moving average of the net new highs 25 indicators holding above 0. Percentage stocks greater than their 50-day moving average holding above the 50% level here. And those two together give us a pulse chart that looks like this, with the S&P at the top and those two indicators both being above their important levels. Means that the breadth indicators here are supportive and therefore green. That's the middle line. You can see again that divergence on the indicator here, with the price at the top, higher high, lower high. Momentum seems to be slowing here. Sometimes that will resolve itself when we get back towards this 0 level here and then start picking up again. In the shortest time frame, what I'm looking for is green rather than red, as we see it here and here. I'd like to see green, indicating significant buying on the E-mini above 2177.50 here. Quick look at the sentiment indicators. This is my version of the Ridex assets ratio, and printed 7.74 here for the second time, once over here, and that is equal the 7-month high for this indicator, just showing that Ridex retail traders are more bullish than they have been for 7 months. If the market rallies further next week, we may see this climbing as an important level about 9.5, which was the previous peak back in December before the market sold off. That would give us the highest reading for a year if we see that level of enthusiasm reached in the next few days. Looking at bull fund assets in isolation, they have been climbing their highest level for this year. Reason the ratio spiked up yesterday, I think, was because the bear funds that we're looking at them here in isolation fell rather sharply down here. There's a lot less bearish money on the table at the moment. In the public poll from AAII, we actually see something different. The bulls percent this week was lower at 29.4, down from 35.6. Bears percent was higher at 29.6 from 26.4. So this indicator, to me, not as sensitive. We're seeing the opposite here, increasing bearish sentiment, but just to remind you, bullish sentiment as indicated by this 4-week moving average in here in black of bulls minus bears. It's a good indicator to follow. That actually peaked above the previous high from earlier in the year and hit its highest level since November last year. The fact that bearish sentiment was up a little bit this week, maybe not as significant as that. And in the investors' intelligence, certainly more bulls. The bulls percent was higher at 56.7, and that's the highest bulls percent since May last year. It's over a 12-month high. Bears percent was almost unchanged at 20.2, but the previous week at 20%, that was a 12-month low. And again, if we take the net, which is the bulls minus the bears, do a 4-week moving average of that, that reached 34.45 this week, and again that's the highest since May last year. So in this poll at least there's an ever increasing sense of optimism. Looking here at the T-bond ETF TLT, as we know the 4-month point of control is at 139. That's the immediate support on the chart here, and it's certainly done that this week rather nicely. The resistance is the halfway point, proven resistance off the high from a couple of months ago to the low. Price up here would put bonds back in really strong price location, and then you'd be looking for higher prices. But currently, at the end of this week, we're printing almost exactly at that halfway point, which comes in about 140.5. Price printing time above that level would be bullish, especially after that support off the 4-month there. This is GLD, the gold ETF. Once again, looking at the halfway point off the July high. And this week, every day, every bar this week has been printed below that level. We're having a little bit of a rally today. I want to see GLD printing back above that point, which is about 128, before adding long positions. This is USO, the oil ETF, and we've been following this level here, the 18-month at 1078 for a few weeks now. Fund was lower earlier in the week and found support very nicely at that level, which is encouraging. If we just see oil a little higher, it will start to look like a higher low on a reasonably major point of control, and that can be quite a significant pattern for higher prices. Price back below that level, 1078, would put this chart in a weaker price location, and price below the halfway point even further. Currently though, where we are, just take this as a kind of risk-on kind of endorsement, if that's the right word. Last week we looked at this level, 94.76 on the dollar index. This red line here represents the 2-year point of control, which is important enough, but also the halfway point from this low to this high. I talked about the sort of the bell curve, and that level continues to be attractive. Right now we're printing almost exactly at that level. Track this chart each day in the pre-open, and I'll be commenting on price relative to that level next week. If you're bullish on the dollar, you want to see price printing time above that level. If we see the technicals start turning down and we haven't really gone anywhere, and then we start printing below that level, that could be a bit of a negative. Right now we're printing exactly at that important level, and this chart isn't giving us really too many clues. Euro FX chart continues to hold above its 4-year. That's strong support. 111.70. Again, I monitor this each day. I'm calling this a strong chart right now because of that price location. If we see price back down here underneath the halfway point, that immediately puts the chart in a weak location. I'd expect lower prices, but currently this is a strong looking chart. Drag the halfway point across, you can see again that that point of control, that minor point of control, is emerging exactly at the halfway point here. Currently we see the above that level, which puts it in a strong price location. Price here would give us a different, much weaker picture. So it's just clues at the moment from the pound chart and the euro chart. Looks like they're holding strong currently at the end of this week. Might need to add this chart into the pre-open. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.